All right, everyone, welcome back to the show. This is JR back at Social Ledger Report. We've been away for quite a while. We've been very busy. If you cannot tell, I'm here by myself. Leon is working for another startup right now, and I'm here to try to continue running the show. So while we've been away, there's been a lot of things happening. There's been nothing but a lot of traditional finance news. I cannot find anything that is very relevant right now with crypto. So what I'm going to do is we're going to have a little bit more of a different segment than what you guys are already used to, where we normally talk about crypto, but now we're going to talk a little bit more adjacent to it, which is traditional finance. And what better than AI? How is AI performing in 2026 in the middle of the year, or almost at the third quarter, I should say? So some things that happened very recently we're going to talk about. Those are the situational awareness getting margin called by caused by the Citadel. So Leopold, and I'm going to mispronounce the fuck out of his last name, Aschenbrenner, he was heavily leveraged on AI names. He got margin called. He was forced to sell public books to Citadel for pennies on the dollar. So we'll have a lot of stuff to cover about that. And then the last thing we'll cover is South Korea's AI and semiconductor cascade. So heavy retail leverage plus margin calls, especially around the memory stocks like SK Hynix. I don't know how to pronounce that, but in the broader Kospi, which was kicked off or amplified by the July sell-off of chip and AI names. Now, I said a bunch of shit, but basically they got margin called, and the stocks in South Korea are just tanking at the moment. That was caused by a forced selling spilled globally. And we're already seeing sort of like this ripple effect across the world. So, I mean, we're kind of fucked if I'm being honest. Like, we're kind of cooked, but, you know, we're here to cover the market. So let's see what happens. But before we continue, make sure you hit like to this video, subscribe to the channel. It costs you nothing. It helps us continue producing this kind of content. Dislike if you dislike it. Let me know what you think, what you want me to cover, and we can go from there. Okay, so for the first video, we will cover Leopold's situation. So I'll cover in the video here in a moment. I'll share with you, but the TLDR, which I'll cover here again in a moment. The TLDR is one, who is Leopold? He was an ex-OpenAI researcher, I believe. He was fired. Apparently, there's like rumors saying that he was fired, that he was gone, but he left and he created his own thesis about situational awareness, basically leveraging AI. And we'll cover that here in a moment, more in detail. Leveraging AI to do investments, and he created a $45 billion AUM earlier last month, and his own firm called Situational Awareness, and recently it was margin called. So wherever we're on Twitter, I think there's a couple of takeaways with this, but you know we'll cover here in a moment. So this is Rainy Talks, and he's basically going to cover this entire situation with Leopold and Citadel.
This guy just made $1.6 billion off this guy in a single day. So we should all know who this guy is by now, but if you don't, this is Leopold Aschenbrenner, a 24-year-old former researcher at OpenAI who got fired in 2024 over a leaked memo. 2 months later, he published a 165-page essay called Situational Awareness, which overnight became required reading across Silicon Valley. He then started a hedge fund, named it after the essay, raised $225 million, and in 2 years turned it into $45 billion, betting early on AI chips, power, and data centers. So this week, the market saw a huge crash after this guy, Ken Griffin, the founder and CEO of Citadel, warned that the Fed might surprise everyone with a rate hike. Leopold was running his fund at a 4x leverage, and his
So for those of you who don't know, when you run something at a 4x leverage, it basically means you're leveraging against your whatever position. Leveraging as in like you're putting higher risk for higher reward or higher return. I'll give you more thoughts here in a moment. I'm going to let you guys finish this.
Main positions in Nebius, SK Hynix, CoreWeave, and Micron all dropped between 35 and 47%. And so as brokers, Goldman, JP Morgan, and Bank of America pulled the trigger and margin called them. This is the part where Ken steps in. Citadel offers to buy Leopold's entire public book for $16 billion. And they do, in a single block trade before market open. The Financial Times reported that he got a 10% discount below market value. And by the time the dust settled, Situational Awareness went from a $45 billion fund to a $10 billion fund overnight. And guess what? The Fed never hiked rates. And the exact stocks that Ken bought off Leopold bounced 20 to 30% the very next day. So just to be clear, situational awareness isn't dead. They still hold a $5 billion stake in Anthropic, along with a few other private AI positions. So the lesson here is you can be completely right about absolutely everything in the market until you're not. And being right doesn't matter if you have shit risk management. Make sure to follow and send this to anyone who thinks that being...
Okay, so check out more in his channel. Very cool guy. We're actually going to watch him here again for the South Korea situation. So again, he made a pretty good overall explanation on this. I think the takeaway is, one, there was very much insider trading happening here. Like, you just got to call it what it is. It was kind of like insider trading, manipulating the markets. More than anything, I should say, manipulating the markets. Man, it's just crazy to me because, like, most people look at, I mean, we live in a time where insider trading and market manipulation is at a very most prevalent, and everyone is just sort of okay with it. And funny enough, like companies like Autopilot, Unusual Whales, or I guess I should say apps like Autopilot, Unusual Whales, and then I believe I'm blanking the name of this person, but I'll find his video here in a moment. He was calling out Trump for manipulating the markets, and then creating a subscription on Truth Social to pay $100,000 to get access to like momentary, like basically you're paying to win by getting access to Trump's tweets when he's talking about the markets. Like, Dell's the most beautiful laptop ever. You should buy some of that, and then moments later you're gonna see a surge on the stock. But now they're paywalling it because they realize, oh, we can actually make money off of this. So everyone is playing the insider game very much. So right before I move on with this other thing, I wanted to cover a few more things. So TVPN, Tech Brothers Podcast Network. I think that's what they stand for. They cover here on this post. Here's the full letter Leopold sent to his LP last night. This is as of July 31st, so man, it's already been over a week almost. Rumors of his demise are greatly exaggerated. So we're going to cover it real quick. It says, this is for those listening in the audio. Dear partners, we let you down this month. We came closer to a permanent capital impairment that is acceptable to us. While we ultimately found a solution that protected the fund and U.S. investors, our intention in running the fund is to never find ourselves in such a position in the first place. Which it was, kind of out of their control, really. But like, what can you do when you have a big player manipulating the markets? Volatility is the prize of a long-term investment returns. Over the past 2 years, we have delivered outstanding results despite occasional sharp pullbacks. But our fund must always be structured such that we can take a loss and fight another day. I will make it my mission to ensure that we will learn the necessary lessons from this experience. I feel like they're still learning, so, that's kind of rich. Again, case closed. Like, it was very much market manipulation at its finest. Here's where things stand. The portfolio experienced a significant drawdown over the course of July, which was exacerbated by extreme moves in core positions over the past week. Many AI names drew down by half or more, while our positive LS spread reversed violently. While we could say much about how unusual the month was, we hold ourselves to a higher standard irrespective of market conditions. As these moves proceeded, we started to see increasingly adverse trading in names publicly associated with us. These dynamics are essentially similar to a bank run, vulnerability begetting more vulnerability. We worked to keep the portfolio within our risks parameters, but gradually this became more difficult as positions rapidly moved against us and market liquidity dried up. On Wednesday night and Thursday morning, we took a decisive action to protect LP capital. We traded a portion of our public portfolio in a block transaction to remove all leverage from the fund and prevent further losses. All shorts were closed and reliance on portfolio financing removed. We currently manage a full paid for public book. Parentheses, long stock and long full paid for options with no margin liquidation risks. This restored stability and allowed us to preserve our private position. I take full responsibility for these events. Leopold seems like a nice guy. Did you know, by the way, and you can verify this on Twitter if you like, he actually learned about this as he was getting fucking married. So that's actually super metal. If I was getting married and if I learned that my position was essentially losing billions, I would probably kill myself. Like, I'm not even gonna lie. I don't know if I can say that, but I would off myself at that moment. Like, I say this satirically, but I cannot imagine how he felt. This what I'm saying. Anyways, so this is the third page. I think we're almost done here. But to be clear, this should rightly have been this should have been a very painful month in terms of the performance of our fund. When AI stocks draw down dramatically while AI technical businesses or business fundamentals are improving, you should expect our fund to be down a lot. And again, this is very much the market conditions that we saw. We embrace volatility, but it should never jeopardize the fund. The fund was not shut down, liquidated, or transformed into a private-only fund, which is kind of rich because Citadel kind of holds a good amount of it now. Anyways, we are continuing to operate as a hybrid public-private fund as before. However, we will manage our public book on a fully paid-for basis while we draw the lessons from these developments. Most importantly, we took the steps that were necessary to fight another day. In the coming weeks, I will focus on putting in motion the necessary changes across our portfolio management, risk team, and vigilance applied across the board. To ensure a higher level of resilience going forward, AI may continue to intensify the market volatility for years to come. Assuming the bubble doesn't burst, mind you, but I digress. These were very expensive scars, but I am dedicated to ensuring they will be invaluable lessons for our organization and for myself as we move forward. My core promise to you is that we will not waste the opportunity to learn from these events. And this should be the last page. On the portfolio itself, we are very optimistic about the current investment opportunity set. The underlying fundamentals are accelerating at the very same time that prices have declined significantly. Thank you for your patience and your partnership. I am fully invested alongside you. Virtually all of my capital is in the fund, and I intend to work relentlessly to demonstrate that the events of this month have made me a wiser and stronger investor. I am available next week for one-on-one phone calls with each of you to discuss all of the above. As an interim update, our current unaudited estimate of the net MTD performance is negative 67%, and of net YTD performance of plus 80%. Final figures will follow through our normal reporting process. We will follow up regarding a group call next week to share further details. So, goddamn, that's insane. Those are insane margins. Like, just the difference. It's kind of crazy. But, like, I mean, it literally dipped. You lost billions for a brief moment, and it kind of bounced back, which is, again, very much market manipulation by Citadel. So, I don't know if they want me to say that or they're going to want you to think that, but that's very much what happened if you know how to read the markets. So, let's go over some comments because why not? So Jeffrey Forrest says he's up 80% YTD because of a 5 billion private Anthropic holding. Anything public was blown up. I mean, that's also the reality. Like Anthropic is going to be a billion, or excuse me, they're going to aim for that $1 trillion IPO. And yeah, I mean, Claude and Anthropic are fundamentally transforming everything that we know. So this isn't, wrong. Isn't Slop generating a man apology? Words. Isn't Slop generating a man apology letter to investors kind of insulting? Yeah, this guy's sentence was kind of badly written, but I mean, I don't know if he used AI to write that letter, but I mean, there's got to be some influence using AI, such as cleaning up grammar. So maybe this is what he meant or something. We're getting some ads here, but still up 80% year to date. Absolute cinema. He took the steps SBF didn't, so he lives to fight another day. I've seen this around before because when I was looking at this at first, when it happened in preparation for the podcast, there were some comparisons I was seeing with SBF. The only difference between Leopold, which is the nerdiest fucking name ever, and SBF, were that Leopold did the right thing by, biting. I don't want to say biting biting the curve or something, but He took a hard pill there. He did what was necessary to make sure people didn't lose money. And SBF literally didn't care. Like, he said he would care at face value, but, he was lying and, he got caught. And CoffeeZilla, exposed him. But I digress. So this is kind of like the letter. Another thing that I want to share here, and since we have a little bit of time here because, we're only covering 2 segments. So I was looking on things I wanted to share here on Twitter, and I was searching for TBPN specifically because there were some clips I wanted to share from the podcast. I would have shared the podcast, but it was going to take way long, and I don't want to be jumping around that video. But I found some very humorous comments here. So this is from Tommy. This is very real. Like, this is not humorous, but I think this was really cool. Tommy says, dunking on Leopold is ridiculously stupid. He left OpenAI, had a thesis, raised a fund, executed against it aggressively, and moved some serious capital around. Respect to those in the arena. Everyone else is a keyboard warrior. Take more risk. And I think that's a takeaway. I probably would have put this at the very end of the episode. Just take more risks. That's all you got to do. Like, you can either do nothing and have no outcome, God, I'm blanking on the word. You can either choose to live life passively and have no returns whatsoever, or you can do some things and then have the opportunity to get something in return just by trying. So that would be the takeaway from this. So if I scroll down a little bit more, I mean, you can kind of read these if you're watching this on YouTube, but a lot of people are kind of just glazing him. Oh my God. So
Or my view on the
So one thing I wanted to share here is his laugh. I think it's kind of funny. Like, not to throw at him, because I actually respect the fuck out of this guy. Like, he's getting married and he lost all his, position, most of it, while he was getting married, but yet he was able to do everything this other person said. So mad respect to this guy. Like, he deserves a lot of credibility, but I just thought this was kind of funny. So this is from, if Leopold was not spared, who are we? And he was such a happy kid. This wasn't a podcast. He just had a pretty interesting laugh, which I thought it was kind of funny.
That's the short summary of my post or my view on the project.
God, I mean, the only thing I want to mention with this is I know a kid who's like autistic genuinely, and he actually laughs like that. So we all got the tism. If you got to be successful if you have the tism, you have higher chance of being successful, is what I'm saying. But no offense to him. So yeah, I mean, people are saying he's fine, and yeah, he was fine in the end. So thank God for that. Okay, I think that's everything I wanted to cover as far as Leopold. We're still good with time. So now let's move on to the South Korea semiconductor fiasco. So essentially, a little bit more on what happened with Leopold, with South Korea, with the whole AI and semiconductor fiasco that happened with the margin call. So along TLDR, and you'll watch a video here in a moment that I'll pull up. Basically, its stock market hit kind of like a Black Friday situation from the 80s, I believe, or 1980s. So as we've known, AI is kind of like this Ponzi scheme where money keeps rotating from like Nvidia to Anthropic, and then Anthropic buys more Nvidia chips using that same money, and because they're doing a transaction, that's considered volume going up, and basically rinse that and repeat with Oracle, Microsoft, Amazon, literally all the big tech companies. They're getting money, they're giving money, and they're all just rotating that same fund over and over. So it's kind of a mess. So essentially, based on my notes here, essentially Samsung and especially SK Hynix, I don't know how to pronounce it still. The big memory chip plays for AI servers and HBM led to a massive rally. Basically, the Kospi hit a record high, or the Korean stock market hit a record high around June 19th to the 22nd of this year. Retail investors went all in. They piled heavily into single stock leveraged ETFs, products designed to deliver 2x the daily move of Samsung or SK Hynix. These were relatively new and approved around late May. And retail poured roughly 14 trillion won, which is about almost 10 billion US dollars, into them in the short period, or in the short term. I was reading off my notes. So anyways, let's just show you this video because I think this guy will do a better job at explaining it than I have. Truthfully, I'm learning this as things are unfolding. This happened like not that long ago. So South Korea's AI bubble just popped. So one thing I'll say before playing this video, I think all of this is a symptom to the AI bubble for sure. Like, everything is just like getting overinflated, and if you have .ai at the end of your startup, there's a good chance you'll raise good enough capital. You just show that you went to Stanford or something here in the US, and you'll get like hella millions of dollars in your series, in your seed round. So anyways, this is for South Korea, so I'm gonna play the video.
So just 3 weeks ago, South Korea had the best performing stock market in the world. The stock market is something called the Kospi, and it's gone up almost 200% in the last 12 months. Compared to other stock markets like the US's S&P 500, which only made 24%, South Korea was just on another level. At one point this year, one of their companies, Samsung, was up over 500%, and SK Hynix was up over 1,000%. And that's basically a
Okay,
10x
so
on your
clearly I'm a Neanderthal because I don't know how to pronounce things. SK Hynix is what it is, and yeah, the Kospi is the the South Korea stock market. Anyways, up later.
money, which is just unheard of. Now, here in the US, our equivalent of the stock market is something called the S&P 500, represented by ETFs like this one, VOO. And inside of this ETF, the top 10 companies represent 36% of this index, which historically is a very high concentration. But for South Korea's Kospi, just two companies alone, Samsung and SK Hynix, represent over 56% of their whole stock market. And that's all mostly thanks to regular people or retail investors that have just borrowed money to invest into the stock market. And that's
Does that sound familiar for any of those who know? If you've ever studied U.S. History, you've probably heard of the Great Depression. This is literally what happened in the 1920s with the Great Depression. We were borrowing money to buy stocks, which is literally the most dumbest thing you can ever do, unless you are like a quantitative researcher. I mean, not to insult anyone, right? But I just have some very strong opinions with this, because if you don't know what you're doing, if you're borrowing money to do something that your friend told you, like, hey, dude, like GameStop stock just went through the roof in 2021. We need to buy more of this, And then you're here selling, I don't know, maybe not selling, but borrowing money. You got a personal loan and you're putting that into GameStop. You're not going to have a good time. And I think this is the key takeaway. Don't borrow money unless you know exactly what you're doing. And even then, you should question yourself and be like, do I really know what am I doing? Or am I just an idiot who is listening to my friend here who may or may not have a good idea? Either way, to each their own with their own risk. But I digress.
roughly 14 million retail investors. They've put their savings and a huge amount of borrowed money into those two stocks. And then, in just 21 days, everything started to collapse. The Kospi dropped 25%, and because of that, 1.2 million accounts, which works out to be 1 in every 30 people in the country, got hit with something called margin call thresholds. This is what happens when a stock goes down far enough to trigger the loan on the borrowed money to liquidate, or basically be forced to sell off their stock. So just 3 weeks ago, South
So that's pretty
Korea
much it.
had
TikTok's a good habit of replaying the same videos. So why don't we look at some of the comments? So you guys already kind of got the gist of it. We'll cover more here in a moment. Some of these comments are kind of crazy. So borrowed money to invest in stock market. Me with an inkling of U.S. economical history. So that's literally what I was just saying with the Great Depression. This will happen in our country, and they will give billions to the wealthy of our taxpayer dollars to bail them out. I mean, they're not wrong. This happens quite a lot. So this other person said, it went up 200% compared to a 27 drop. That's nothing. Excuse me. That's nothing. So this is why I see Koreans all flocking to North America and Europe for traveling over the last 3 years. The whole concept of stocks makes no sense, and many bachelor's degree is... This guy doesn't know how to pronounce bachelor's. Bachelor's degree is literally in economics. So everyone has different opinions, I guess, so to each their own. So why don't we talk about the Kospi right now? So the Kospi, I do trading. I don't do international trading. I mostly worry about domestic companies. But I think for those of you who are in a similar position like I am, we can learn with this together. So the Kospi has experienced extreme volatility, plunging roughly 40% from its mid-June 2026 peak due to leveraged ETFs. So that's literally what we were covering. The recent roundabout, this is what I wanted to mention. So strong earnings from major U.S. tech clients fueled an unprecedented one-day surge, easing panic selling and stabilizing regional tech shares. So South Korea just had like a pretty bad day, and then here comes the the American words. Here come the American companies pseudo bailing them out? Question mark. Like, yeah, I mean, Nvidia, Apple are among the largest companies in the world, or most valuable assets in the world if you own that company. So it makes complete sense. Like, I think, you know, we're gonna be fine, guys. Like, I do think the bubble is bound to burst. These are just little symptoms of something that is coming. It's definitely coming. It's just, I would be careful where you put your money, is what I'm trying to say. At the end of the day, you got to do your own research. You cannot trust what people are telling you unless they're like experts. Like, shit, if Leopold was telling us here, dude, you got to buy Micron, you got to buy SanDisk, I'd be like, okay, but why? And then he explains why, and I'd be like, well, based on your background, based on your fucking thesis, bet I'm in. That's what I would do. That's what I would tell people to do to some degree. Like, you just gotta understand who you're asking. You gotta understand who you're talking to. Like, would you rather get financial advice from Leopold himself or from someone working at McDonald's, your coworker, if you're working at a fast food place? You know what I mean? So, this other person I wanted to cover here, Rennie Talks, he did a pretty good. I mean, we're gonna cover this from a different angle. I think his comments and his audience is kind of funny as well, so I kind of wanted to cover it. This is from a different angle. This is trillions of won being lost in Korea. So
Korea
anyways,
is majorly
play the video.
right now. Here's why. This July, the Kospi fell over 33%. That's not just a bad month. That's worse than 2008. Samsung and SK Hynix are down double digits in a single session. Circuit breakers got triggered 4 times this month alone, and over 1 million people got margin called. But as of today, the Kospi's up 17%. It's the best day this market's ever had. SK Hynix is up close to 30%, and Samsung is up over 20%. Why? Because Microsoft, Amazon, and Meta all beat earnings overnight, telling everyone that the AI spending story isn't dead. But here's the mechanism that turned a correction into the market's worst month ever. People weren't just buying Samsung and SK Hynix. They were buying leveraged products on top of them. Funds that double or triple whatever the stock does. On the way up is free money, but on the way down, you don't just fall with the stock. It compounds every single day until the losses are worse than the crash itself. Regulators are starting to take action. 2 weeks ago, they banned any new leverage products from launching. And as of today, they've tripled the minimum deposit required to trade the ones already out there. And here's the part that makes it messier. The government didn't just stumble into this. They approved these leverage products in the first place, obviously, specifically to stop Korean money flowing into similar leverage ETFs already trading in Hong Kong and the US. It was meant to keep investment and the Korean won at home. And now that same strategy is under real scrutiny. Questions remain on how the new curbs will actually work in practice, and there are mounting calls for the government to take more accountability.
Yeah, so essentially they're finally getting regulated, which is kind of what happened with the US economy after the Great Depression, if in case you didn't know. Like, you can't literally buy stocks using your credit card because that's doing the same thing. So I think it was about time. I'm honestly kind of surprised. Like I said, I'm the most dumbass here in this room because I don't know the Kospi. I barely just learned how to pronounce the HK Hynix or whatever. And I'm not trying to undermine my position. All I'm saying is, some of us are just not aware of what is happening on the other side of the world. In many ways, South Korea is one of the most advanced countries in the world, one of the most developed, with some of the highest. It has one of the largest economies in the world, and yet they're barely regulating this. Like, to us, we've been part of this game for a long time, so it's kind of interesting. It makes you think. Is my point here? So, at this point, he's not going to cover anything new that we've already discovered. I thought it was very interesting how his take was. The comments here are hilarious. I don't know if you can see them, but this one, JT here says, Citadel wanted Leopold's portfolio. The South Korean regards were just collateral damage. And the creator liked this. I just covered this, and people were just kind of on the same page with that comment. So Koreans finna buy shorts, and then the market goes up. Yeah, so it's kind of like Jim Cramer, where it kind of does the opposite of what they're doing. So just gambling, no access to home, lost generation. I mean, I don't think. I mean, it's just I don't even know how to say this, but I think that a lot of people who say that when you're trading stocks, when you're trading cryptos, they call it gambling. I think they say that because they don't know better, because either they had a very bad experience and they give up in trading or investing altogether. But whether you're trading, you're investing, all of these things really matter. This is how people actually get rich. Your money does more for you when you're putting it in an asset that is active and working around the clock. Where if you're putting it on, whether you're just holding cash itself or you're putting your money on a low yield savings account or even your checkings accounts, you're going to lose money against inflation. So the best thing to do, guys, is just to put your money on an asset that you trust, such as the S&P 500. Anyways, I'm not a financial advisor, but I just wanted to say that. I think we're good with time now. So one thing I wanted to say here is, so I know we talked a little bit about different things. I think the coverage that I did, given how I've been a little bit rusty from traveling lately, I could have given a better cover. But one thing I wanted to do is look at. I wanted to do a live coverage on Twitch or here live on Twitter or X, whatever you call it nowadays. Probably shouldn't be drinking soda because it's making me very gassy. The one thing I want to leave this episode off is take more risks, put your money on assets that appreciate and that at least are keeping up to the S&P 500, if not the S&P 500 itself. Just because when you're taking no risks, you're not going to get anything in return. So if I were to put my money on something right now, it would probably be Bitcoin. Why? Because Jim Cramer says, I'm going to sell my Bitcoin. So this is what he said recently. It's a 1 minute long video. But
when I think about the equations that people tell me could never be cracked to get to my crypto, it sounds to me like the University of Chicago announcement. Should I be more careful?
I think that you should give yourself 3 or 4 years, and at that point, I would get rather paranoid about it.
Really? 3 or 4 years? That's not that long.
No, that's not that long.
Oh boy. Yeah, I realize I'm waiting. Ethereum, not really, maybe even worse. So I think that people have to take this man seriously because they're doing commercial quantum. And this Chicago study basically cracked a number. It did an equation that no one thought could ever be solved. So right. Isn't that also what you think about Bitcoin? Now, there'll be people in Bitcoin who say, look, I don't know what you're talking about, Jim. You don't know anything. I don't have to know anything. I asked the questions. I didn't give the answer. But Arvin Christian knows quantum incredibly. He knows Bitcoin and quantum. And I'm going to sell mine.
You are?
Yes, absolutely.
Really? Just on what he said?
Well, he's the man. He's the man.
IBM CEO is the man. That's crazy. This is probably a long segment video, but all I wanted to share here as a close off is I'm putting my money in Bitcoin. I'm putting my money in the S&P 500. Why? Because just do the reverse Kramer. Like, that's literally going to make you more money than following whatever he says. So he's selling his Bitcoin, and the argument is basically quantum threat. And Wasp here, I think, covered it pretty well. Everyone is scared of Bitcoin and the quantum threat. If quantum can break Bitcoin, what is going to happen to banks and to traditional finance? So quantum computers are literally, we're going to be fine, guys. Like, I wouldn't even worry, like, genuinely. Like, I'm just telling you what I would tell my family, what I would tell my friends. Like, I would put my money in these things. Quantum threats are very trivial. But anyways, we'll be back next week. We're going to try to do something more interesting and cover whatever is relevant at that time, if anything, crypto, like this week. Recently, there was non-crypto news. But let me know what you guys think. Subscribe to the channel. Like or dislike. Leave us a comment. Let me know what you guys think, and we'll be seeing you next episode. Take care.